Are multifamily properties a good investment? Now, you may have considered flipping houses or investing in single-family homes, but have you ever thought about if multifamily is a good move for you? It's a lot easier than you may think, and in this video, I'm going to break down the potential benefits and show you why multifamily properties might just be your unexpected golden ticket in real estate. First, let's talk about cash flow potential. There are significant advantages in multifamily properties for generating strong cash flow. Because like when you're buying an apartment complex, even if it's on the smaller side, 30, 40, 50 units, think about that, that's 50 units. Housing is a necessity. Now for us, we typically focus on a minimum of 75. The reason 75 is the magic number, friends, is because at that scale, you can have the economies of scale to be able to have an on-site manager, on-site maintenance. But again, think about that, 75, 100, 150, 250 people living there paying rent. Remember, housing is a necessity. People can't forego housing. And then the reality is, in this present state of where we are in this country, there is an absolute shortage of quality housing units. So it just generates a great positive cash flow. Next, we've got economies of scale. Economies of scale is an incredible benefit and leverage tool in your investment. What I mean by that is that you have fixed cost associated with the investment. You're able to get great investment debt, oftentimes with a 30-year time horizon on the debt with fixed interest rates. And then you have a manager and a maintenance person on site, and then 75, 100, 125 units. So you've got a relative fixed element to your cost, and you're scaling up the size of the revenue, and it really makes for a powerful leverage mechanism. The other thing is when you have that kind of scale, you're building into the model a built-in reality of vacancy. So you're already going to be successful with a 6% vacancy rate or whatever the numbers are depending on the location you're at. You're also factoring into the model a bad debt ratio, meaning that there are going to be some people you got to evict that they're not going to collect on and you got to put them out. That's part of it. But because of the fact that you've got 100 units instead of 3, it doesn't hurt you and you're able to grow your income even better because of the economies of scale. If you're enjoying this video, make sure give it a like, subscribe to my channel, and comment down below what you'd like to learn next. Next, let's talk about diversification and risk reduction. That multifamily offers a great benefit of diversification. Like when you're investing, say, in a single family home, you've got one tenant paying the bills. They move out and you've got to go in and do repairs. The house may be down for a month or 2 months before you get it re-rented. Let's say they move out right before Christmas. Not a lot of people are moving around Christmas. So it may be vacant for 3 months. And so you've now lost basically a fourth of your income on that property. Whereas in a diversified approach of multifamily, you've got 100 people living in the community. One person moves out or 2 people move out or 3 people move out. Even at Christmas, it doesn't hurt you because you turn the units over, get them ready, even if they don't rent till the first of the year or even into February, unlikely, but even if that was the case, it still doesn't hurt you because of the diversification. It also reduces the risk that you have, again, by that same means. You have a multiplicity of tenants in that one location, so if one person or 2 people lose their job, it's not widely affecting you. So again, it really does provide an element of diversification that is truly beneficial because of the size and the reality of what multifamily does. Another great thing to look at with multifamily is the financing options. This is an area of commercial real estate that gets a benefit because it is a necessity, right? The federal government backs loans, Fannie Mae and Freddie Mac, that even in economic times where there may be challenges, the federal government still stands in and backs and guarantees loans, and that makes capital available. Right? You can get, even in today's moment in time when interest rates are high and inflation is run hot, you can get a good Fannie Mae loan or Freddie Mac loan right now at about a 5.25 rate to 5.5 rate. That is still a low cost approach to acquiring multifamily. Beyond that, you've also got banks, credit unions, regional banks, and commercial backed facilities that all also put money into financing multifamily options. And one of the reasons they do so is because, again, housing is a necessity. So you have a lot of great financing offers, and even too, you have a HUD loan that can go out to 40 years backed by the government. So you've got some incredible financing options that you don't have in other sections of real estate. Next, we want to talk about tenant demand. And what I mean by that is that there is genuinely a shortage of quality affordable housing units in this country. By many studies, that ranges between 3 to 5 million. And we're not going to get there because the price of housing continues to rise up and makes it unaffordable. And so when you have that kind of demand in supply equation, meaning a constricted supply and ever-growing demand, what happens to price? Price goes up, meaning the cost of rent goes up and the value of the property goes up. So this is something that is truly critical to understand, because this is not going to change over the next decade. And so think about that for a second. If you step back and think about being an investor, you've got an opportunity to invest in an investment category that's going to have a constrained supply and outstripping demand for at least another 10 years. Now, I'd probably go as far as to say that it's a 20-year thing, because the government's not going to be able to solve this equation. The free market economy hasn't solved it, because the cost of new construction outstrips the cost of being able to rent it at an affordable price. That's why when you see new construction, it's always A-class, expensive rents. And when you're looking at quality affordable housing, meaning market rate, providing good housing to working Americans, there's just not enough of that. So it is a fantastic opportunity because of those equations. Another reason that it's a great investment is because of the passive opportunity to invest in multifamily. And our company has been providing investors just like you with passive investment opportunity for 20 years, where they're earning double-digit returns with no loss of capital. So I want to encourage you to click on the link in the description below, join and become part of our investor club to find out about these off-market opportunities that we share with our club, or you can also fill out the form and request to have a call with one of our team members to discuss what type of opportunities we have today. That's all I have for you today, folks. I hope you were able to learn a lot today, and I'll see you in the next video.